The only thing more dangerous than making a bad investment is making a good one. Because once you are proven right, your brain ceases to be an analyst. It transforms into an ego defense lawyer, dedicated to one single client, your original idea. It will discard evidence, ignore testimony, and silence all critics to prove that you, the brilliant investor, were correct all along. This single, toxic mechanism has cost more fortunes than honest errors combined. It is the filter that ensures you see exactly what you want to see, even as the market burns down around you. This is the diagnosis, confirmation bias. It is the fatal flaw where we seek out, interpret. It is the mental filter that turns a diversified newsfeed into a self-serving echo chamber. It is the reason you feel so certain, and the reason certainty is the most expensive psychological luxury in finance. This is the blind spot that cost one tech investor $500 million. This neurological mechanism is built on efficiency. Your brain hates cognitive dissonance, the mental stress of holding to contradictory ideas. It eliminates that stress by eliminating the contradictory idea itself. It is a shortcut to psychological comfort. It is the path of least cognitive resistance. And in the financial markets, comfort is the most expensive thing you can buy. The reward pathway, the mesolimbic system, lights up when a piece of data validates your choice. The feeling of being right is chemically addictive, forcing you to search for the next hit of validation, not the truth. Confirmation bias is why political polarization exists and why it is lethal to your portfolio. Once you have a position long or short, your brain begins to build a protective structure around it. This is a defense mechanism against psychological pain, prioritizing mental ease over capital preservation. It is a slow, self-inflicted execution. The brain begins to assign greater credibility to sources that agree with you. You start searching. Why stock X is a buy instead of the neutral? What is the future of stock X? You are actively asking a leading question, and the internet, being the perfect echo chamber, provides the only answer your ego wants to hear. You filter your reality. You silence the bears. You promote the bulls. You create a reality where failure is impossible because all evidence of it has been systematically purged. The danger of confirmation bias is that it is an active choice. Loss aversion is passive refusing to act. Confirmation bias is active aggressively seeking justification. It is the psychological foundation for market manias, like the dot-com bubble or the 2008 housing crisis. When everyone believes the same thing, the critical voices, the ones that would save you, are perceived as enemies, not analysts. The bias forces you to throw money at your mistake, not because you see value, but because you see a chance to prove your original, correct self still exists. The financial catastrophe we examine belongs to Mr. Zhang, a tech entrepreneur who invested his entire liquidity, over $500 million, into a single, soaring Chinese tech stock. He bought it because he understood the underlying technology, and his first $100 million in profit validated his genius. He became convinced his understanding was superior to the market's collective wisdom. In 2021, the Chinese government began a massive regulatory crackdown on the tech sector. This was the fundamental, objective shift in the thesis. The stock immediately dropped 30%. This was the signal to reevaluate, liquidate, and preserve capital. But Mr. Zhang could not. His brain was too invested in the belief of his own foresight. Mr. Zhang did not sell. Instead, he intensified his information filtering. He dismissed the regulatory news as temporary political noise and misunderstood policy. He unfollowed analysts who downgraded the stock analysts who were suddenly incompetent. He instead searched exclusively for obscure forums and financial commentators who echoed his singular, desperate belief: the stock is cheap, buy the dip. The objective facts were in plain sight, but his cognitive filter made them invisible. His internal monologue became a self-fulfilling prophecy. Every small upward movement, a single green day, was heralded as validation. Every major red decline was rationalized as panic selling by the weak, or a temporary manipulation by shorts. The objective truth that the company's business model was being legislatively dismantled was entirely invisible to him. He could not afford to be wrong, so he simply stopped seeing the evidence that proved he was. He missed all critical exit points because his ego refused to acknowledge the external threat. The greatest cost of confirmation bias is the destruction of your peer network. Mr. Zhang's business partner, Jane, the rational analyst from V1, tried to present a comprehensive exit strategy based on regulatory filings. Zhang refused to listen, labeling her a bear who didn't understand the long-term vision and was selling out early. He pushed away the only voice that was operating on facts, ensuring his isolation in the echo chamber of his own mind. He chose the comfort of validation over the necessity of challenge. The final destruction came when the stock was delisted. The $500 million investment vanished. The catastrophe was not caused by a market failure, but by a failure of the ego. The defense lawyer won the case in the internal court of Mr. Zhang's mind, but the client's portfolio was executed. This is the true pathology of confirmation bias. It doesn't just blind you. It ensures you are surrounded only by other blind people. The echo chamber provides the comfort, but it multiplies the risk. Every validation from an outside source is just your own flawed thought bouncing off a wall. The only person you are listening to is yourself. The constant need to be right consumed his entire ability to analyze. Contrast this with an investor who understands the bias. They assign a devil's advocate to every trade. They actively search out the most aggressive short thesis against their position. They pay their team to find the information that proves them wrong. They understand that a belief is not a possession. It is a hypothesis that must be rigorously tested by its opposite. You are not infallible. You are a biological machine designed to conserve energy and reduce stress. The most immediate path to reducing stress is confirming what you already believe. To escape the trap, you must find a way to make being wrong more rewarding than being right. You must pay a premium for the information that causes you cognitive dissonance. To survive confirmation bias, you must adopt the opposite mindset, seek disconfirmation. You must actively hunt for the evidence that proves your idea is wrong. You must reward the people who criticize your positions. You are not trading a stock, you are investigating a crime scene. And the evidence is always in the places you don't want to look. To implement this defense protocol, install these 3 barriers. 1. List 3 reasons your investment will fail before you buy it and assign a percentage probability to each. 2. Reward your team or network financially or professionally for valid, objective criticism. Pay the bear. 3. Set a mandatory date to reevaluate your thesis using only data sources you usually disagree with, treating them as primary evidence. This has been Broken Brain Finance. We don't analyze markets. We analyze minds. Subscribe for the truth.